The power has shifted. For the first time in years, the power in Calgary's real estate market isn't squarely with sellers. November brought a major shift in depending on what you're buying or selling. This is either the best news you've heard all year or the wake up call that you've been waiting for. Stick around to the end and I will show you the new trends we haven't seen in prior years causing so many of these changes. In the past month, sales are down 13.4% at 1,553. New listings at 2,251 have dropped 3.3%. Inventory is up at 5,581, up nearly 30% year over year. Months of supply is sitting at 3.59, up 48% year over year. Total residential prices have continued to drop nearly 5% at 559,000. The detached home price is down 2.1% at 733,000. The semi-detached price, the first time we've seen it decrease in a few months, at 671,700. The row homes are continuing to drop month over month at 424,400, down 6.2% year over year. Apartment prices continue to go down as well at 309,300, down 7.2% year over year. Detached homes in Calgary, sales were at 823, down 5% year over year. New listings at 1,075, up 3%. Inventory at 2,444, up 32%. Months of supply sits at just under 3 at 2.97, and the benchmark price is 733,000, down 2% year over year. So what is happening with that single family home? Detached is still the most resilient segment in Calgary. Months of supply is just under that 3, still leaning towards that balanced side. Inventory is meaningfully higher than last year, but demand is also holding better than expected. Only a 5% drop in sales year over year compared to minus 13% citywide. Now, in what areas are we seeing some of the most significant and some of the least amount of changes? City center is sitting at one of the most steady areas with a minus 1.07% change year over year in its benchmark pricing. The north and northeast, we're seeing some of the biggest changes, with the northeast having a minus 4.86% change in its benchmark pricing year over year, and the east seeing a negative 4.66% change in its benchmark pricing year over year. Now, another area that isn't seeing much change and strong demand, staying resilient with all its changes, is the Northwest, with minus 0.89% in its benchmark pricing year over year. So the detached softness is not citywide. It is heavily concentrated in the north and the east side of Calgary, where competition from new builds and affordability ceilings are pushing resale prices downward. For the first time since 2020, detached is not driving price growth, but it is not declining like the high density markets. As we head into 2026, we should see the prices likely flat to slight downward pressure through winter. Balanced conditions should hold through Q1 unless a surge in new listings hit. The Northeast and the East remain the best value zones for buyers, while the West and the city center remain the strongest for sellers. Semi-detached home sales were 166, down 3% year over year. New listings were at 225, exactly a 0% change. Inventory levels were 546, 50% change year over year. Months of supply was at 2.9. That is a 56% change year over year. And the benchmark price was 671,700, minus 1% year over year. Semi-detached homes are the best performing segment out of everything on a price basis. Even with 50% more inventory, prices remain flat year over year. Why is semi-detached outperforming? Lower price point relative to detached homes, strong demand for move-up buyers priced out of that detached market, and limited semi-detached inventory in many established communities. We haven't seen this level of semi-detached stability during a balanced market since 2018 and 2019. Normally, semi-detached follows detached homes closely. In 2025, they're outperforming it. As we head into 2026, expect semi-detached to remain stable given their price position. High inventory will cap upside, but downside risk is limited. For buyers, not as negotiable as row homes and apartments. Still competitive in the inner city. Sellers, price it right and these will move. One of the safest listings this winter. Row home sales were 257, minus 22% year over year. New listings were 396, down 2% year over year. Inventory was at 901, up 38% year over year, with months of supply sitting at 3.51, a 77% increase year over year. The benchmark price sits right at that 424,400, down 6% year over year. Row homes have fully transitioned into a balanced buyer territory. Sales are down significantly and inventory is pushing seasonal highs. Why row homes are weakening? Big wave of new home completion, including quick possessions, easing demand from first-time home buyers, and rents have been flattening. More investors selling units as cap rates have softened. So in what districts are we seeing these significant changes with row-style homes? Well, once again, we're back to the north, the northeast, city center, and the west. The northeast is down 10.6% year over year, and months of supply is up at 6.75%. That is a clear buyer's market. City center is down 5.5% with its benchmark pricing now at 583,500, and the west is benchmark pricing is down almost 3%, sitting at 456,900, with months of supply sitting just over 3. These are some of the most stable conditions out of all these districts. The Northeast has not shown double-digit year-over-year price declines since pre-2017. This is a new pattern and directly tied to increased supply. Prices likely continue to slide through winter. Watch the Northeast and the Southeast for deeper adjustments. Expect heavy competition from builders in early 2026. For buyers, this is currently the best value in Calgary. Heavily leverage the availability. For sellers, you must price sharper than the comps and expect longer days on market. Now for apartments, sales are at 307, down 28% year over year. New listings at 555, down 15% year over year. Inventory at 1,690, up 14% year over year. Months of supply sits at 5.5, a 60% increase year over year, and the benchmark pricing sitting at 309,300, down 7% year to date. This is the segment under the most pressure. Falling sales, steady inflow of resale condos, more rentals hitting the market, builder product competing heavily in the southeast and northeast and beltline adjacent zones. District level pricing. Where are we seeing the biggest changes? Again, we head back to the northeast, east, and the west. Northeast is down 12.4% year over year with this benchmark pricing now sitting at 269,500. The East down 10.5%, now sitting at $231,700 with this benchmark price. West sitting at $333,900, down 7.4%, with months of supply sitting just under 4 with 3.92. Still the healthiest area for those apartment style products compared to every other zone. So CREB is explicitly linking improving rental supply plus easing rents to reduce condo buying activity. This is new. Rental weakness hasn't been a cause of home ownership since COVID. With the influx of purpose-built rentals hitting the market, we are now seeing the direct effect that it has on the condo resale market. And here's exactly how it's happening. Expect ongoing pressure into the first quarter of 2026. Recovery depends on rental market tightening back up. For buyers, condos are the most negotiable asset class out of everything in Calgary right now. For sellers, prepare for long days on market. Incentives are going to help you move it. Now, I mentioned to you earlier in the video some new trends that we haven't seen in prior years, and I already highlighted a few of them, but I'm going to go through what we haven't seen and how this is different. First thing is high density weakness driven by 3 supply channels: resale listings, new home quick possessions, rental inventory. This triple supply pressure is new and haven't seen anything versus what has went on from 2021 to 2024. We were in such a high demand market over these past few years. So builders were putting them up as quick as possible. Not to mention the city of Calgary did lots to push through and get what they considered affordable housing, which just turned into purpose-built rentals. So when we have the pressure come down, not as many people looking to buy, we have so many more rentals on the market, and we have so many new builds coming to market at the same time. And like, I get texts from builders still trying to sell product that they didn't sell from September. And they are slashing prices. I mean, $50,000 changes overnight, even bigger. I had a builder here in Calgary slash their price over $100,000. They were sitting at $725 and dropped it to $620 in one day to try and sell some of these homes. If we want to know truly who and what is causing some of the biggest price changes, it is the rental market, and it very much is builders. Builders have the ability to slash those prices in order to get rid of them. They're still going to make some money off of it, not as much as they used to, but if they're still able to slash prices by $100,000 and get profit, how overinflated are some of these homes? And with all the purpose-built rentals coming, and they need people to fill them, 3 months rent, damage deposits. I saw a builder with an apartment with over $75,000 in incentives, saying they will cover condo fees for the first 2 years and add a ton of upgrades into the unit before you move in. Builders have that ability to do what they need to do in order to get things sold. And that directly then affects the resale market because of how big of the changes that they're making. And we are seeing it right now. And like I say, with the purpose-built rentals, and they're looking to fill people in there, they're also incentivizing stuff by first or last month rent free, lower deposits to get through the door in order to get people to start renting those out. And if you're able to negotiate some of that rent and you bring it down a few $100s and you can save that, and you're going to go, you know what? I'm just going to hold on a little longer. I'm going to pay this cheaper rent, cheaper than I've paid the past few years. I thought maybe I'll buy, but now I can wait another 6 months, save a little more money, and then I can see where the market is then, and I can buy something then. So again, we are seeing that pressure because a lot of people are going, well, maybe I don't buy just yet, as we have this elevated inventory. So 2, detached plus semi-detached decoupling from row and apartment style homes. the largest performance gap between property types in more than 5 years. 3, extreme district performance spread. Every time I talk about, now let's see what areas we're seeing some of the biggest changes. Where are we seeing it? The north and the northeast. These areas are showing price drops that we haven't seen since the early 2010s across most segments. And the fourth thing causing so many of these changes is balance arriving earlier. Most fall markets remain seller biased until December. This year, balanced conditions arrived in September. Overall, for the rest of 2025 and into early 2026, expect a balanced to slightly buyer tilted winter with stabilization returning maybe around spring 2026 if listings remain moderate. So now is the perfect time to sit down and put a plan together. You don't want to be sitting on the sidelines when a great opportunity comes up and you're not ready. Now you want to get your ducks in a row. Put a plan together, figure out what you need to do, talk to the right people, get connected. That's what I can help you with. Click the link in the bio, book a call with me. Let's put a strategy together for 2026 and stop sitting on the sidelines. Thank you very much for watching.